Hey, welcome back to Everything Money. We're glad you joined us again. Today we are talking about EA Sports, Paul. This is the...
Oh, you stopped it. It was so good.
EA Sports.
It's in the game. God, you're so good at that.
I'm okay. This is the world's largest third-party video game publisher. Obviously, they've been doing Madden for like 20 some odd years. And an incredible video game system. I don't play these games at all, Paul. Neither do you. Ain't nobody got time for that. But the young kids today, they love it. So we're going to go into EA Sports, look at the fundamentals behind the company, the stock price. Is it justified? Is it overpriced? Is it undervalued? We will use our 8-pillar analysis to look at the fundamentals behind this company. And we will go over to Mo and see if people are trading EA Sports.
We'll see.
Because it's in the game, Mo.
It is in
Paul,
the game.
I introduced Paul. It's Paul, right?
It is Paul.
Go on.
Nice meeting you earlier.
Yeah, good to see you.
So first off, guys, this is the most common comment we get is, you didn't do your research. I know. I don't do research ahead of time because there's 10,000 stocks out there. I need to be able to screen them in some way. And what matters most to me is how much am I going to pay for revenue, profit, and cash flow.
I mean, in general, you're saying no to 99 out of 100 stocks anyway.
Correct.
So.
Am I going to miss some value plays because I didn't do more research? Absolutely. Do I care? Absolutely not. Your job is to not waste time, not fall in love. Look at the numbers first, see which ones pique your interest, and then do more research from there. So we continue on.
Market cap.
$39 billion and a 58 PE.
Oh boy.
Boy, boy. Profit margin is 11.8%. Look at that gross margin, Seth. 73.5%.
Wow. Look at that.
Seth, so the return on assets and return on invested capital aren't. I like the return on invested capital a lot more. The free cash flow last year was $1.8 billion with an average of the last 5 years of 1.6. So pretty consistent free cash flow as time went on. Income statement, guys.
Pillar number 3 is revenue growth over the past 5 years.
Not a big grower, but a shower. $5 billion to $5.7 billion.
That's what you are. Yep.
So, guys, remember, you should be willing to pay a high PE if there's a lot of growth. This is not a lot of growth for a 58 PE, in my opinion, right? So it's a check mark, but still.
Not a good grower, but a show.
Profit over the last 5 years.
Pillar number 4, sorry.
1.17 down to 676. Now, this explains it a little bit better, guys.
Uh-oh.
We can see that our profit is down significantly over the last couple of years. So that explains the higher PE. So now I'm going to be especially aware of the free cash flow multiple. Because remember, earnings can be manipulated based on SEC rules, accounting rules, etc. Free cash flow, it can be manipulated, but it's a lot harder to. So there probably was some write-off along the way here. Just something to consider.
How about shares outstanding, Paul?
All right, 309 million down to 286. So not bad, not amazing, but not bad.
Buying back, that's fine.
Now,
current assets over current liabilities.
I think we should explain our software first.
I would, Paul. If you're interested in these numbers, you can join our Patreon below. You can get access to the software, the data feed. Frankly, I tell Paul, I don't know how anyone can make decisions without having this data. It's more like guessing, which is what I was doing for a long time. But if you're drawn to these numbers, you can have this software, and Paul can tell you how.
We'll give you the mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, exclusive daily content, access to all 3 of us, real estate calculator, stock screeners, retirement calculator, and a Discord community with 5,000 people in it that you can talk to them about their investment ideas, about life, everything. All for 84 cents per day, guys. 84 cents a day. Less than a crappy cup of coffee from the gas station and a good cup of coffee from McDonald's. I do hear their coffee is pretty good.
It's not. Spoiler alert, it's not.
Well, that's because you're a snob.
I am. Keep going.
Guys, our competitors are $235 a month. We're 84 cents a day. This is a no-brainer. You get everything. What are you doing? Just hit the button.
I've paid $80 for a pound of coffee before.
Seth, it's amazing to me. Here's what Seth will do.
Absolutely.
Here's what Seth will do. Paul, money's tight.
Why do you have to critique me?
Paul's money's tight. And then the next one is, oh, by the way, look at this nice little...
I said when money wasn't tight, I bought an $80 cup of coffee.
First off, how much is a bag of coffee?
About, I mean, a nice one. Yeah, it did $15. Sure.
$20.
Yeah.
You paid $80. Was it worth it?
Well, it's this buttery Kona coffee from Hawaii. So when times were good, Paul, I was buying.
Times are good again.
Well, maybe I'll bring you some.
I don't drink coffee.
Shall we keep going, you filthy animal?
Yeah, let's go. So current assets over current liabilities,
Pillar
guys.
number 6. You
7.2 billion versus 2.96. Holy cow. And guys, they can pay off all their debts with their cash on hand. They've got enough money to pay off all the debts of the company. That's equivalent to you taking your checking account, just your checking account, and paying off your entire mortgage, all your student loans, and your entire car payment, all your credit, everything.
All the coffee bills.
All the coffee bills that he buys on credit with a firm. Is
leverage.
that a firm?
I leverage. Yeah.
You buy it all, you pay it all off with the cash in
I buy
hand.
on margin, Mo. How about free cash flow?
So like I said,
if we could curse on this channel, I'd be cursing you out right now. Go
well,
ahead.
when we do the videos just for our patrons and our subscribers,
I'll lay into your
be
ass.
cursing.
Okay, great. Go ahead. Free cash flow growth.
Guys, free cash flow is cash from operations less your capital expenditures. I add this line here to make the math easy for you that you can only get by paying 84 cents a day. 1.46 to 1.8 billion in free cash. Look how consistent this free cash flow growth is. Wow. Look at this, Seth. I love this. Guys, I like consistent cash flow. To me, when I see consistent cash flow growth or earnings growth or revenue growth, it makes me tickle inside because I look at it saying, I know that this company is probably doing the right things to grow the company in the right way. Okay? Their average is 1.6 billion. 1.6 times 20 is $32 billion. The current market cap is 39 billion.
Yep.
So I think it's a little high, especially for not much growth left in it. Okay? I mean, not much growth that's been happening lately. Is it a good staple of entertainment? Absolutely. If you ask everybody out there who makes the best video games for sports, what are they going to say?
EA. Are people trading EA in the bid and ask mode? This bid and ask trading platform.
The problem here is if you just draw this line back to August of 19, and you can just see how strong that resistance point is, and it's just consolidating in this area. So it hit that resistance point just last week, and it bounced right down on you. And I don't know if that's earnings related or what, but either way, it didn't work. So definitely a downtrend. It's going to hold that support of $132. Why don't we go and look to see how big of a struggle it will be to get back over that all-time high. And newsflash, it's going to be a big struggle because A, your volume's declining in the near term, and B, you drop through all of your major moving averages. So you're going to have to get through your 200, then your 100, then your 25, then your 50. So for them to get up here and stay up here is going to be very tough. And if you look, Seth, historically, they've got over the moving averages and fallen back into them, got out and fallen back into them. So I'm assuming that the story is going to be the same without an incredible amount of volume where I just don't even see it going back the past 3 or 4 months on this thing.
What sets these resistance points? Is it just people's mindset that this stock can't go a certain price, or how over years and years can it not break through?
I think, I don't actually know, but I think there's a lot of people out there, and especially with these quant funds where they start hitting certain prices, namely all-time highs or moving averages, and they just sell off and go right back down. So not only do they have traders going against them, investors going against them, now they have computer trading going against them, which really can knock these things down. And I think that's why you see these really strong resistance, because who would thought that you have this great climb going up and then all of a sudden just can't do anything? You get back to that all-time high, it falls again. So you saw the exact same thing over here last week. So I'm not exactly sure, but that's just my theory.
If you follow the numbers and then you want to know what you pay for stock, that transition is somewhat difficult, Paul. So the last piece of the puzzle is using our stock analyzer tool to define what we want to pay for this company, taking growth and a long-term growth plan into account. Show us the stock analyzer tool.
Shameless plug. Please follow me on Instagram. I think it's right there. Mo too. Okay, guys. So EA Sports is a staple, but what's the growing market of it? I don't know. I really have no idea. I'm just going to look at the history. Our stock analyzer tool is going to show you the 1, 5, and 10-year numbers. And my job is to also be conservative, especially when companies aren't growing a lot. Correct, Seth? I want to be conservative. So I did these revenue growth numbers. Pause the screen, take a look at it, so you can get an understanding of where this is going. The only difference to look at is desired annual return and share change. You need to start at a higher number and go lower, right? So it can be counterintuitive. But say with desired return, the higher the desired return, the lower the price. That's why I start with a low price with a high return. Think about that a little bit. It can be confusing. Watch more videos. You'll understand as time goes on.
Yes, if I pay more today, my return moving forward will be obviously less.
Correct. Now, one thing I want you to note, look at the profit margin. Remember we had a 1-year drop in profit? It shows right here, 11.8 versus 20% versus 25. I ignored this completely. I didn't even factor it in there. One-time thing, I looked at 18, 20, and 22%. This shows, guys, that anytime there's a one-time drop or one-time gain, I'm going to be cautious about it and say, wait a second, I can't factor it in forever. So I hit the analyze button. Uncle Seth, this is just overpriced.
Oh, boy.
This is just way overpriced. I mean, none of the numbers are in. They're all red. So let me go up top and change my assumptions. Let's say they're just going to do 3% a year for the rest of the time. Still overpriced. Guys, I love EA Sports. I'm going to go to their 8 Pillars page to get a recap of it. It's just way too expensive. Just way too expensive for me. Would I love to own this company at some price? Yes. What price is that? Probably half of where it's at right now for my personal buying. That doesn't mean for you, but I'm a value investor. I want to buy it for way lower than it's actually worth. So I'm just not touching the stock at this price.
Yeah, if you the more, how would I say this? The more conversations I have with normal people, Paul, I urge them to read about really, really successful, famous investors, and they simply do not chase these high flyers. They wait to buy a dollar for 50 cents. It's got to be a screaming deal, and this is nowhere near it. So
yeah, and there's 10,000 stocks out there, guys. Your job is to find the 20 or 30 or 40 of them that are absolutely make sense. And over a long period of time, you'll beat the market by a few percentage points. And guess what? You'll be fabulously, fabulously wealthy if you do that.
That is our take on EA Sports. Fondle the thumbs up like you fondle Paul's belly, and we'll see you next video.